Here to dive into industry trends with leading ETF experts, this is ETF Spotlight with Neena Mishra.
Hello and welcome to ETF Spotlight. I'm your host, Neena Mishra. My guest today is Tony Bancroft, Portfolio Manager of Gabelli Commercial Aerospace and Defense ETF. We're talking about aerospace and defense stocks and Boeing in particular. Tony, welcome. Great to have you with us.
Thanks for having me, Neena. This is a fun day. We'll have discussing aerospace and defense, my favorite subject.
Yes, so you have a fascinating background. You previously served in the United States Marine Corps as a fighter pilot. So thank you for your service. And please tell us a little bit about your experiences there and then your journey from the Marine Corps to your current role as a portfolio manager.
Yeah, well, my background, I flew F-18s in the Marine Corps for about 10 years. I graduated from a military college, the Naval Academy, and was fortunate enough to get a pilot billet to go fly in the Marine Corps. I went through flight school down in Pensacola, Florida, and was fortunate enough to get selected to fly the F-18, and then moved out to California, Miramar, Fighter Town, USA, as I'm sure you've seen the movie Top Gun, for about 10 years, and deployed on my first deployment on the USS Carl Vinson. We did a Westpac deployment. Came back and then deployed again to Iraq on a non-flying tour. In the Marine Corps, they want you to get out of the cockpit and do something not flying for a period of time, and then got back in the cockpit and deployed again with my squadron to Japan and Japan, Korea, and essentially the Western Pacific again. So I did that, then came back to Miramar and was an instructor at the F-18 training squadron, and did that for about 3 or so years. And then my obligation for flying my flight contract was up, and decided to get out, and then was fortunate enough to meet Mayor Gabelli, and got the opportunity to get hired as an analyst here, and I went back to business school and got my MBA at Columbia Business School, and I've been following aerospace and defense ever since.
Amazing. So now let's talk about Boeing and the January 5th incident. So on that particular day, the door plug of a 737 MAX 9 operated by Alaska Airlines that blew out mid-flight, and that forced the plane to make an emergency landing. So we saw all these videos and they were really scary, but you know about the technical details and issues. So could you please walk us through what exactly happened that day?
Yeah, I mean, obviously the investigation's ongoing, and as you saw, the FAA just announced last night that they have authorized the MAX 9 to start flying again once inspections that they prepared are complete. So I think, from the information we've gathered, that's sort of been put out there publicly. It sounds like very unfortunately that there was essentially a quality escape at Spirit Aerosystems, which supplies the fuselages to Boeing for the 737 and other aircraft as well, but for Boeing's the 737 MAX, and that fuselage comes to the Renton facility, the final assembly plant up in Seattle, with the door plug in it, and it sounds like it needed to be when it got there. There was some there were some issues with the installation of it sounds like both door plugs. And again, this is all just from what I've read and people are speculating, but just trying to understand the story. And those two door plugs needed to be readjusted or maintained or had some maintenance done on them. And when they were reinstalled essentially or refitted, some of there are these four sort of lock bolts that keep the door plug in place. And again, this is just from what I've read and what I've seen and what's been speculated, that these lock bolts were, really just essentially just not there. Where it sounds like they were just not reinstalled after Boeing sort of. It is unclear who actually did the maintenance on the jet, because sounds like there are Spirit employees in the Boeing plant to help with any kind of quality escapes or any kind of issues that come up when a fuselage is delivered and not, needs some work on it. And again, I'm sure I'm not explaining it exactly to the technicality that the NTSB will, but I think in general, at that point, these four bolts were missing, and of course, essentially, when the plane was flying, the pressure on the inside of the aircraft, as the aircraft gets pressurized as it goes up to keep the cabin altitude similar to when we're on the ground, so people don't get hypoxic. That pressurization blew out the plug because it wasn't seated. It got misseated. It got how the door fits in and goes against these fittings that hold it on a pressure basis. It was essentially those bolts weren't there to keep it seated, and it blew out. And I think that's sort of the gist of what happened. And it's very unfortunate, but I would say big picture looking at this, is a very unfortunate, and thank goodness, nothing more severe happened. I mean, easily there could have been someone near that door and could have gotten sucked out, and very could have been very much more tragic and much more dire. But all things being equal, the aviation industry is extremely safe. I mean, there hasn't been a crash related death in aviation since 2009, 15 years. So the FAA is the gold standard of travel, of any kind of travel, and really there's no other comparison to any other form of transport than aviation, in particular the FAA. So I think you certainly need always to keep that in the back of your mind when you're thinking about this. And this was obviously a very severe incident that happened, and Boeing's gonna have to go and look at how this happened, and hopefully and have this never happen again. But I think in the big picture, you sort of have to look at on the whole and see sort of the history of aviation and how safe it really is when you travel.
Yeah, totally. I trust that FAA has been doing its job, and flying is safe for me. I'm not scared to fly. And you mentioned that FAA has cleared some of these jets that were grounded. And today we are recording on January 25th for the purpose of reference. And Boeing's shares are down more than 6% today, and about 20% since the incident. And while the FAA cleared some of these jets, they have put limits on Boeing's output. So that may be impacting the share price performance today. What is the likely financial impact on Boeing in your view?
Yeah, I'd say in the near term, it's two things. One, there's a concession component, and I think we saw Alaska put out this morning on their call, Alaska Airlines, that they're looking at about a $150 million profit impact. So I think if you took that number and then added the the impact from United Airlines, pari passu to how many aircraft they have compared to Alaska, it adds up to about a $330 million impact that they'll have to pay out likely have to pay out of concessions. And I've spoken with Boeing about this, and they said that you really can't be so quick to throw some numbers on it because there's a lot of ways that a large airline customer like Alaska and United, which are two major customers for Boeing, how they deal with concessions. So I don't know if it's fully clear how that will pan out. I think that's one piece of it, though. And then the other piece, of course, is the increase in production expansion. And again, that's sort of unclear as well with what the FAA said. I think Boeing needs to speak a little bit more with the FAA and find out what they mean by that exactly. Obviously, Boeing's planning on, starting up a new line in their Everett facility for a fourth final assembly line for the 737 MAX, along with their three other ones they have in Renton right now. So how I take it is their increased rates are going to be halted until, SDFA is comfortable with the quality, the sort of the quality of the QA process, with more eyes on the quality side of it. So how I've modeled it, Boeing has essentially stated that they're ending up the year at for about 38 a month, and I really only had them going up to about 42 in the second half of the year. So that's what 24 planes. So that's going to be an impact on 24's number. I mean, whatever that is, how many billions that is, depending upon how they've negotiated those planes. But looks like those planes will likely, if they depend. And again, that might not be the case either. They might, the FAA could also, I guess, in theory, go to the Boeing plan, and all the airlines go, and they all have their quality inspectors there, and they say, hey, this looks good, or it's worse. So, but I'd say that's in the near term. That's how I'm looking at it. But I'd say over the long term, I think Boeing is going to get this figured out. I think they figured out what the issue was, and the planes are cleared to fly. And I think this, I'm highly confident this is never going to happen again, and Boeing will figure this out, and be moving along in the long term. But in the near term, there's going to be some price volatility, and the stock will react on news based on news that just like today, you'll probably see more of that in the near term, and I think that's how it is.
Yeah, we sincerely hope that they are able to figure it out. So both Alaska and United have said that they found additional loose bolts on their MAX 9 planes. So that suggests that this was not an isolated incident. And as you mentioned, fortunately and miraculously, no one was hurt in this recent incident. But we all still remember that a couple of fatal crashes in 2018 and 2019, which killed a total of 246 people, unfortunately. And so there are just so many questions about Boeing's culture, its quality control systems, and particularly because the company we hear has been outsourcing more and more of its components. Lately, you talked a little bit about Spirit Aerosystems. So do you think Boeing has lost its focus on safety?
I don't. We'd always say back in my old life when I was in the fleet, and in a squadron, you would say safety is paramount, and it's everyone's a safety officer in a squadron, and meaning that from the commanding officer all the way down to the hardworking Marines that are turning wrenches, everyone's a safety officer, and if you don't have safety, everything else is nothing. It's rubbish, right? You don't have your safety, you got nothing. So, I think from the outside, people from the outside, if someone's an outsider looking in, it's easy to quickly look and say, someone doesn't care about safety. But if you sort of look at it in reality, the only way Boeing is ever going to anybody in the aviation industry is going to uh, survive or thrive is with absolute maniacal focus on safety. And I think Boeing has that just like any other, aviation operator. And for that matter, anybody that operates in a dynamic environment. Aviation is just it's unforgiving, and you have to live it, breathe it, own safety. And I don't think that's ever a question. I think Boeing that's paramount. It's the focus of all focuses, because there's nothing else if you don't have it. So I don't think Boeing's lost its focus on safety by any means. I think that question is really, it's just not relevant to aviation, because it's just if there's no confidence, no one's going to fly. If that makes sense.
Right. So we all want Boeing to succeed because it is one of the most iconic American brands. It's a symbol of the manufacturing here in the US. And there are just two companies in this duopoly. Airbus seems to be pulling ahead. If we look at the stock price performance over the last 5 years or so, Airbus stock has done much better, significantly outperformed Boeing. And it is also the world's biggest plane maker for 5 consecutive years now. So why do you think we haven't seen such issues with Airbus?
I'd look back and say, first of all, aviation is very dynamic. And, and throughout the history of Boeing and Airbus, there have been, you can go back and look. Mishaps have happened in both airplanes, and thank goodness, the FAA has really set the gold standard for aviation. And I think it's unfortunate that this has happened with Boeing. I'd say, again, overall, I think they're both extremely safe. There's both very well-run companies, and they're both extremely safe. I'd say probably because of the last mishap with Boeing, with the 2 last mishaps, they brought their production rates down quite a bit, right? And this is in 2020, and then COVID happened, and they were essentially running at low, I think they had very low rates is the term they were using. It was probably, I'd assume somewhere around five jets a month. And then they shot up, when the MAX got cleared again, and the COVID sort of ended, they started increasing rates back to where they were working back towards where they were in prior to the mishaps. And that's a big number to go from whatever it is, low rates, which I assume is somewhere in the single digits, up to just last year, 38 a month. Whatever that is, 100 plus CAGR, 100% CAGR of in the last 3 years. So it's. I'm not saying that was a factor, but I think that was probably a big step up. I think any kind of production line, when you have that amount of step up, it probably is. It's hard. There's probably a lot of moving parts, and where Airbus, I think they were at like in the 60. And I should go back and look at my numbers, but I think they were at around 60 a month or 50, somewhere out there. And then during COVID, they backed off to 40, and then have increased since then. But I think that potentially could have been a factor. Obviously there's no excuse there, but again, overall, commercial travel is extremely safe. The FAA, I think the fleet in the U.S. fleet is somewhere 8,000, 9,000 planes. 40% of those are Boeing planes. So the gold standard is 40% are Boeing planes that haven't had been essentially crash mishap free in the last 15 years. But I think Airbus is about 20% of the fleet, of the U.S. fleet. And then, Bombardier and the other regional jet manufacturers. So I think overall they've had in the 737 frame, just as a huge history of safety, and I mean their numbers are, it's been flying since the 60s. So that airframe is a very solid, well built, well designed airframe, and the numbers just show that. So I think in the big picture, that's how you got to look at it. But I guess that I would just leave it at that.
So let's talk about the aerospace and defense industry outlook, and let's discuss the two segments separately, starting with the defense segment. So we have the war in the Middle East, the war in Ukraine, which has been going on for 2 years, more than 2 years, and Chinese threat to invade Taiwan have been rising, particularly since the recent election in Taiwan. And of course, North Korean saber rattling also continues. So defense spending all over the world has been rising, mainly because of these rising geopolitical tensions. And here in the US, the two parties rarely agree on anything. But defense spending is an area that usually garners bipartisan support. So tell us about your outlook for the defense companies.
Yeah, I mean, I think it's just like what you said. The global geopolitical outlook is unstable. I think since I've gotten into the fleet, I mean, we had obviously the global war on terrorism, and that was obviously a very volatile time as well, but it was relatively isolated to the Middle East. And you fast forward another decade, and now we have a full-blown war in Eastern Europe, essentially a full-blown war almost in Israel and in Gaza, and you're seeing a lot of instability in some very important shipping lanes and areas that are there's just a lot of volatility, and with that, the defense budgets, if you look forward, they usually say, hey, the U.S. defense budget. I think the DoD puts out their annual budget request, and they look out 5 to 10 years forward, and they say, oh, it's going to probably grow at GDP plus or minus, and then but if you actually historically look backwards at the amount of growth, it's been growing at a 5% CAGR. So I think that that mismatch there is very telling. And on top of that, NATO and the sort of the 2% target you've probably heard about. For years they were essentially missing the 2% target, and the U.S. we're over at 4%, and I think you're starting to see now with these. The wars in NATO's backyard, you're starting to see NATO spend on defense. You've seen it, like you mentioned yourself recently. And if NATO does get to that 2% target, that's about an $80 billion step up in allied defense spending, which is a 7% bump in defense spending. And so I think it'll be unfortunately it'll be very beneficial for the defense industry, and I think you're sort of seeing that right now with all the, what was going on in Ukraine. I mean, I think they went through 7 years of Javelin and Stinger production, 7 years of production in 1 year. So, and then the articles about howitzer demand for howitzer shells and small arms and anything to do with like long range fires, HIMARS. You're just seeing a lot of demand for that now in Patriot missile, and I think that's probably, all things being equal, that's going to continue in the situation we're in right now.
And let's talk about the commercial side. And we know that global air traffic continues to expand, and probably rising middle class and emerging economies and their rising incomes, that would be a key source of air travel demand in the coming years. And as far as these emerging economies are concerned, we have seen a divergence in the performance lately. So, for example, Indian economy has been doing quite well. Chinese economy is not. So what is your outlook for demand from the commercial aerospace businesses?
I think Boeing puts out a commercial market outlook, and they've talked about essentially about 300 million people in Asia and between China and India coming into the middle class over the next decade or so. And these people are starting to have disposable income, and they want to travel and they want to fly, and that's really one of the main drivers for the growth in the commercial aerospace industry. That on top of structural changes of the democratization of air travel, low cost carriers, building of airports, and then just the ability for people to travel where 20 years ago they just couldn't travel to. It just leads you down this road of essentially these big secular tailwinds of travel growth, and then it's projected to outpace global GDP by a wide margin over the next 20 years. And I think the commercial aerospace industry is going to benefit from that. They're talking about building 40,000+ planes over the next 20 years to support this growth. From these new entrants into the commercial travel market.
Very interesting. Now let's talk about your ETF. And again, it's the Gabelli Commercial Aerospace and Defense ETF with the ticker symbol GCAD. Please tell us about this ETF and also talk about some of the top holdings that you like a lot. And I saw that some of these aerospace and defense companies reported their earnings recently in the past couple of weeks. Were there any earnings that you really liked? Please tell us about them.
Yeah, we started GCAD, Gabelli Commercial Aerospace and Defense active ETF last year, January of 23, and had a good year last year. And we again, for all the things that we just talked about, the sort of the secular and structural tailwinds of the industry, we think it's a great place to invest, and we think that it will. We think we can, outpace the market with this industry, and we think having it actively managed, where we go and pick our favorite names, sort of benefits the investor. I'd say as far as recent earnings, you heard just recently, Textron had some strong earnings the other day. And we heard GE's earnings, and they actually are doing very well. I know the stock took a little bit of a dip that day, but if you actually have their outlook, all strong, essentially, unconstrained demand for their products, for their engines, and the service piece of it as well. We also heard Lockheed, again, on some of their some of their missiles and defense business, they have a lot of backlog, a lot of demand. So overall, I think we're seeing really good, really good market setup for aerospace and defense, and we see that continuing to happen, going forward. And as far as my names, I do like a company called Ducommun. They're a small ticker's DCO. They're a small aerospace and defense sort of sub-supplier, based out in outside of Los Angeles, California, and they have good exposure to the aftermarket, commercial aftermarket, and they also have good exposure to the defense, and they make a lot of sort of high tech, highly engineered parts for the industry. We also like Textron. Textron just won a ticker TXT. They just recently won a large defense contract to build the replacement for the U.S. Army's Black Hawk. The program's called FLRAA, and they'll be starting. They've been ramping it mostly more on the engineering side right now, but that will start ramping in the next few years. And there's about 4,000 Blackhawks out globally, and The Army has about 2,500 of them, and so that'll be a big benefit to Textron. They also have a really good defense business, and they have business jets, which have been doing really well. A huge backlog there with some new aircraft that they've produced that are very nice, that are top of the line and latest technology, and so they've got a great outlook. And one of my biggest holdings just got actually taken out. Command, they just got bought by a private equity firm. Arcline, Command's ticker KAMN, and they for about 100+% premium, and they are also aerospace and defense sub-supplier, highly engineered. They have a business that does highly engineered ball bearings, and they have these great little businesses that are on these long-term programs, and they're usually the sole supplier. So they were just acquired last week. So there's a lot of good names in the portfolio, and we got a bunch more, and we've got a good outlook on it.
Great stuff, Tony. We'll leave it there. Thank you so much for joining us today and for sharing your insights.
Thanks so much, Nina. It was a lot of fun.
That was Tony Bancroft from Gabelli Funds. Let's talk about some of the ETFs in aerospace and defense. So the largest ETF in this space is by iShares. It is the iShares US Aerospace and Defense ETF. The ticker symbol is ITA. And because this is market cap weighted, the ETF has a lot of exposure to Boeing. So currently RTX is its top holding with 18% weight, and Boeing is the second largest weighting with about 17% weight. Then there's another ETF by Invesco. The ticker symbol is PPA. So this is the second largest in this space, and this follows a slightly broader index. So it provides exposure to companies in the defense, military, homeland security, and space industries. And this follows a modified market cap weighting. And if I look at the top holdings, RTX is the top holding with about 7% weight, and then you have GE, Lockheed Martin, and then Boeing is at about 5.2% weight. The third most popular ETF in this space is by State Street, and that is slightly different because it follows an equal weighted index. The ticker symbol is XAR. And the one by Gabelli is the newest product in this space. So it is quite small as of now, has about 5 million in assets. If I look at the performance, so over the past year or so, the equal weighted ETF has delivered the best performance, obviously because of Boeing, but because it has comparatively very little exposure to Boeing. Among the other ETFs, Invesco product has also done quite well, and the Gabelli ETF has outperformed the most popular product in this space by iShares. Thanks for listening. If you have any comments, questions, or suggestions, please email podcast@zacks.com. Please make sure to subscribe so that you do not miss any episode. And if you like our show, please leave us a rating on iTunes or wherever you get your podcast.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.